At 5:47 a.m., before the sun had fully cleared the Oklahoma horizon, 31 federal vehicles rolled silently into position around a 92-acre religious compound outside Tulsa. No lights, no sirens, just engines idling in the dark, headlights off, agents waiting on a single radio command. Inside the compound, 12,000 square feet of executive offices sat empty. For now. In 6 hours, they would be sealed, stripped, and cataloged as evidence in one of the largest religious fraud investigations in American history. By the time the sun rose fully over Harvest Point International Church, federal agents would walk out with server racks, offshore banking ledgers, private jet manifests, and enough documentation to charge 39 people with conspiracy to defraud the United States. The number at the center of it all, $1.4 billion, not raised, not spent, laundered, through a network of shell companies stretching from Tulsa to the Cayman Islands, built entirely on the backs of congregants who believed they were tithing to God. 18,000 people filled that sanctuary every week. None of them knew they were funding one of the largest financial deception schemes the FBI and IRS-CI had ever traced back to a religious institution. For nearly 3 years, 2 federal agencies worked in near-total silence, building a case big enough and airtight enough to survive what would inevitably become one of the most closely watched prosecutions in recent memory. Every subpoena, every bank record, every quiet interview with a former employee had to be handled with the understanding that one leak, one careless move could give 39 people enough warning to disappear the money for good. This is how it was built, and this is how it came apart. To understand how a church became a billion-dollar laundering machine, you have to understand what Harvest Point actually was, and what it very carefully pretended to be. On the surface, Harvest Point International Church looked like any other Sunbelt megachurch success story. Weekly attendance north of 18,000. A live-streamed service reaching congregations in 41 states. A polished media arm producing broadcast-quality content every week. A non-profit relief foundation with its own logo, its own annual gala, its own glossy impact reports. Leadership that spoke fluent scripture and fluent finance in the same breath, comfortable quoting both the Book of Malachi and a quarterly earnings call. But federal investigators say the church's public face was a shell built around something far more calculated. A financial engine engineered to move money out of the country faster than any regulator could realistically track it. According to the indictment, church leadership created a maze of nonprofit subsidiaries, a global missions fund, a disaster relief trust, a clergy housing initiative, and at least 4 other entities with similarly vague, mission-sounding names. Each one was legally distinct. Each one collected tithes and donations under its own tax-exempt umbrella, filing separately with the state and federal government. On paper, these entities funded overseas ministries, built wells in drought-stricken regions, supported persecuted congregations abroad, and provided housing for traveling clergy. In practice, prosecutors allege almost none of that money left American soil for the reasons congregants were told. Court filings describe a system where donations flagged for a specific overseas project, a well drilling initiative in East Africa, a school building fund in Southeast Asia, were pooled into a general subsidiary account before ever being dispersed, making it functionally impossible for any single donor or any outside auditor to trace their specific gift to its stated destination. That structural ambiguity, investigators say, was the point. As long as some money reached some legitimate project somewhere, the church could point to genuine humanitarian work as cover for the much larger sums moving in an entirely different direction. Instead, according to court filings, funds were routed through a series of offshore holding accounts registered in the Cayman Islands and the Isle of Man. Accounts that investigators say existed for exactly one purpose: to make donor money disappear from the paper trail before it reappeared, cleaned and untraceable, in the personal portfolios of church leadership. Federal agents estimate that over a 6-year period, more than $1.4 billion moved through this network. Real estate acquisitions across 3 states, a private aviation fund covering 2 jets and a helicopter, offshore trusts benefiting family members who, according to investigators, had never once set foot inside the church they were allegedly profiting from. And every dollar of it, prosecutors say, was raised from ordinary people who believed they were being faithful. Retirees tithing from fixed incomes, young families giving beyond their means because leadership taught that larger, sacrificial giving unlocked greater blessing. Small business owners who folded church investment partnerships into their own financial planning because leadership assured them it was both a spiritual and a sound financial decision. That teaching, investigators would later allege, wasn't just theology, it was infrastructure. Every sermon about sacrificial giving, every testimony from a blessed donor invited on stage to describe how giving beyond their means had changed their life, functioned, prosecutors say, as a recruitment tool for a financial pipeline the congregation never knew existed. Court filings describe a giving culture engineered with precision. Weekly offering totals were reportedly tracked against internal targets the same way a sales organization might track quarterly revenue. Leadership allegedly received private financial briefings each month comparing offering income against projected offshore transfer capacity. A detail investigators say makes clear this wasn't disorganized mismanagement, but a functioning, monitored financial operation hiding inside a house of worship. This investigation didn't start with a whistleblower walking into an FBI field office with a folder of evidence. It started, as so many of these cases do, with a number on a tax form that simply didn't add up. In 2021, an IRS-Criminal Investigation forensic accountant flagged an irregularity buried inside Harvest Point's nonprofit tax filings. The church's global missions subsidiary reported $41 million in outbound wire transfers to religious partners overseas, but IRS-CI's International Financial Intelligence Unit could only independently verify a small fraction of that amount ever reaching a legitimate operational destination. That single discrepancy, a gap between what was reported and what could be confirmed, opened a financial trail that would take federal investigators nearly 3 years to fully map. IRS-CI's Financial Crimes Unit built the paper case first. Agents pulled 6 years of wire transfer records, offshore banking disclosures, nonprofit filings, and internal accounting statements, cross-referencing every transaction against known shell entities and registered agents in multiple jurisdictions. At the same time, the FBI's Financial Crimes section built the human case, interviewing former church employees, financial officers who had left under unusual circumstances, and at least 2 longtime congregants who had grown suspicious enough of the church's finances to start keeping their own private records of giving statements and internal communications they'd been shown. What agents found, according to court documents, was a level of financial sophistication rarely seen in religious fraud cases. The kind of layered structuring more typical of international money laundering operations than a non-profit ministry. Multiple tiers of shell entities, each one owning a piece of the next, rotating signatories on offshore accounts deliberately designed to obscure exactly who controlled the money at any given time. And according to internal communications recovered later, church leadership allegedly used coded language to describe the movement of funds, terms like seed transfers and harvest allocations. Phrasing investigators believe was chosen specifically to blend financial movement seamlessly into religious vocabulary in case anyone outside leadership ever saw the documents. By early 2024, the Joint Task Force had built a case strong enough to bring before a federal grand jury. 39 individuals, from senior pastoral leadership down to offshore account administrators and 2 outside financial consultants, were named in a sealed indictment. Securing that indictment required investigators to establish something notoriously difficult in religious fraud cases: intent. Prosecutors couldn't simply show that money moved through confusing channels. Nonprofit accounting is often legitimately complex. They had to show that leadership knew exactly what the structure was designed to do, and built it that way on purpose. Recovered internal emails discussing how to structure transfers below reporting thresholds, and at least one recorded conversation referencing the need to keep certain account details off the shared drive became central pieces of that intent case, according to court filings. The raid was scheduled for a Wednesday morning, deliberately timed to catch financial officers at their desks before they could access or begin altering offshore banking systems for the day. Before the operation launched, the Joint Task Force spent weeks in coordination meetings mapping out exactly how the raid would unfold. Which agents would breach which buildings, which residences would be hit simultaneously, and how to prevent any single defendant from alerting the others once the operation began. Investigators knew that if even one target had advance warning, offshore administrators could trigger a rapid transfer protocol that would move the remaining funds beyond recovery within minutes. Timing wasn't just tactical, it was the entire case. At 5:47 a.m., the first wave of FBI evidence response teams breached the administrative wing of the Harvest Point campus, moving through darkened hallways with search warrants authorizing the seizure of financial records, servers, and electronic devices. A separate team secured the media production building, where the church's broadcast operation, the same slick professional live stream that reached 41 states every Sunday, sat dark and silent for the first time in years. Outside, a perimeter team held position at every entrance to the 92-acre property, prepared for the possibility that word could leak before the operation was fully underway. Agents had rehearsed the entry sequence for weeks, understanding that a compound this size, with this many buildings, and this many people with potential advanced knowledge, carried real risk of evidence destruction if any single point of entry was delayed. Simultaneously, IRS-CI agents executed search warrants at the private residences of 6 senior church officials, homes that, according to court filings, ranged from a 9,000-square-foot lakefront estate outside Tulsa to a beachfront property in Florida purchased entirely through one of the offshore shell entities under investigation. Inside the church's finance office, agents recovered what investigators would later describe as the backbone of the entire case, an unencrypted backup server containing years of internal financial communications that leadership reportedly believed had been permanently wiped months earlier. Those records, according to the indictment, revealed a financial operation running on 2 entirely separate sets of books. One set, polished, professionally audited, and presented to the congregation, to state charity regulators, and to the public, depicted a thriving, transparent ministry with responsible stewardship of every donated dollar. The other set, kept strictly internal, tracked the real movement of money, offshore transfers, real estate acquisitions filed under shell company names, and what prosecutors describe as a rotating distribution schedule, quietly benefiting senior leadership on a recurring basis. By mid-morning, agents had frozen accounts across 4 separate jurisdictions, moving fast enough to intercept an outbound wire transfer that court documents say was initiated less than 90 minutes after the raid began. An apparent last-ditch attempt, prosecutors allege, to move remaining liquid funds out of federal reach before every account could be formally locked. It didn't work. The transfer was flagged and frozen before it cleared. At the same time, HSI financial crimes liaisons, brought in specifically for their expertise tracking cross-border shell company networks, assisted the Joint Task Force in mapping the full offshore structure, tracing accounts through at least 3 additional countries beyond the initial Cayman Islands and Isle of Man entities already under scrutiny. By early afternoon, all 39 arrest warrants had been executed. Senior church leadership was taken into custody without incident, escorted from the property in full view of stunned neighbors and early arriving staff. Financial officers were detained at their homes. 2 offshore account administrators, believed to be outside the country at the time of the raid, remain on an active federal watch list as investigators work with international partners on possible extradition. One of the more striking moments of the operation, according to agents on scene, came when the church's longtime chief financial officer was taken into custody from his home office, where investigators say he was actively logged into one of the offshore banking portals when agents arrived, apparently in the process of reviewing account balances before the workday began. His laptop, seized mid-session, gave investigators a live window into account structures they had previously only been able to reconstruct after the fact through subpoenaed records. Court documents note that several of the lower-level defendants, administrative staff and bookkeepers who processed transactions without necessarily understanding the full scope of what they were part of, appeared visibly shocked at the scale of what investigators laid out during processing. Defense attorneys for several of these individuals have since indicated their clients intend to cooperate fully with prosecutors, a detail that could prove significant as the case moves toward trial. Congregants arriving for a scheduled midweek service that evening found the campus sealed behind federal tape, church vehicles impounded in the parking lot, and no explanation beyond a single printed federal notice taped to the front doors. For many, prosecutors say, it was the first sign that the ministry they had trusted with their savings, their retirement funds, and in some cases their children's college funds, had been something else entirely, a financial operation wearing the language of faith. Inside the compound, agents worked through the day cataloging evidence room by room. Investigators recovered luxury vehicle titles registered to shell entities, private school tuition payments routed through the Clergy Housing Initiative, and a folder of internal memos discussing how to respond if a journalist or regulator ever asked pointed questions about the church's offshore holdings. A document prosecutors say proves leadership understood exactly how exposed the operation was, long before federal agents ever arrived. By late afternoon, the raid had expanded beyond the original scope. A tip from one of the detained financial officers, cooperating in hopes of a reduced sentence, led agents to a previously unknown storage unit 40 minutes from the church campus, containing additional paper records leadership had kept offline specifically to avoid digital discovery. That single tip, investigators say, may end up being the most consequential break in the entire case. What makes this case different from a typical fraud prosecution isn't just the size of the number, although $1.4 billion places it among the largest religious fraud cases the FBI has ever pursued. It's the deliberate, architectural design of the deception underneath it. According to court filings, church leadership didn't stumble into financial mismanagement over time, the way some smaller cases unfold. Investigators allege they built an entire theological framework specifically to justify and conceal the movement of money from day one. Sermons centered on seed faith giving, internal teaching that framed larger, undocumented donations as spiritually superior to smaller, traceable ones, and a private donor tier reserved for the church's wealthiest members that reportedly bypassed standard financial reporting entirely. Federal prosecutors describe it as fraud engineered at the architectural level. Not a single leader quietly skimming from the collection plate, but an entire financial system built from the ground up to move money beyond the reach of donors, independent auditors, and eventually, federal investigators. If you're new to this channel, this is exactly what we cover. Real federal investigations, how they're built case by case, and how agencies like the FBI and IRS-CI work together to take these operations down. If that's the kind of content you want more of, hit subscribe now, because this case is far from finished. Because as of this recording, federal prosecutors say the forensic accounting is still ongoing. The $1.4 billion figure, already staggering by any standard, may not be the final number. Investigators are now working backward through nearly a decade of financial records, examining whether the offshore network extends further than the 6-year window currently covered by the indictment. Sources close to the case say at least 2 additional shell entities identified in the recovered storage unit records have not yet been fully traced, meaning the true scale of this operation may still be years from being fully understood. There's also the question of who else knew. Court filings hint at outside financial consultants and at least one accounting firm that reviewed portions of the church's books over the years without ever flagging the offshore structure to regulators. Whether that represents negligence, willful blindness, or something prosecutors could pursue independently is, according to legal analysts following the case, likely to become its own line of investigation in the months ahead. In the weeks following the raid, the full scope of the operation began to surface in a series of federal court filings, each one adding another layer to an already staggering case. Prosecutors allege that senior church leadership maintained a rotating internal distribution schedule, a spreadsheet recovered from the seized backup server, allegedly detailing periodic transfers from offshore accounts back into personal trusts, benefiting leadership and their extended families. One entry cited directly in the indictment allegedly shows a single transfer of $4.2 million, routed through 2 separate shell companies before ultimately landing in a real estate holding account tied to a senior pastor's adult children. Children who, according to investigators, had no formal role within the church whatsoever. IRS-CI's forensic accounting team says the offshore structure was specifically engineered to survive a surface level audit. Nonprofit filings looked entirely clean on their face, because by the time money reached the accounts subject to standard review, it had already passed through multiple legally distinct entities designed to break the paper trail. Investigators compared the technique to layering strategies typically seen in organized financial crime and money laundering cases, not religious institutions. At a joint press conference following the arrests, FBI and IRS-CI officials emphasized the scale of the betrayal at the center of the case and the deliberate effort involved in concealing it from the very people funding it. Officials said the investigation sends a clear message to religious and nonprofit organizations nationwide. Tax-exempt status offers no shield from federal financial law, and any organization, regardless of its stated mission, will be held to the same standard of accountability when donor funds are allegedly diverted for personal enrichment. 39 defendants now face a range of federal charges, including wire fraud, money laundering, conspiracy to defraud the United States, and violations of federal nonprofit reporting requirements. If convicted on the most serious counts, senior leadership could face decades behind federal bars. Asset forfeiture proceedings are already underway. Federal prosecutors have moved to seize the church's real estate holdings across 3 states, the private aviation fund, and every identified offshore account tied to the network. Though officials caution that recovering meaningful funds for the congregants who were defrauded will likely be a long, complicated, and uncertain legal process that could take years to resolve. Meanwhile, state charity regulators in Oklahoma have opened a parallel civil inquiry into whether Harvest Point's nonprofit status should be permanently revoked and whether state-level penalties could be pursued independently of the federal criminal case. Civil attorneys representing a growing group of former congregants have also filed the first of what's expected to be several class action lawsuits seeking to recover donated funds directly from whatever assets remain once federal forfeiture proceedings conclude. Legal experts caution that congregants are likely to be near the back of the line behind federal restitution claims, meaning many may recover only a fraction of what they gave, if anything at all. The two offshore administrators still believed to be outside the country remain the most significant unresolved piece of the case. Investigators say extradition negotiations are underway with foreign authorities, though cases involving offshore financial crime can take years to resolve even when cooperation from the host country is strong. For the agents who spent nearly 3 years building this case, the raid itself was never the finish line. It was the moment the real work, untangling a decade of deliberately obscured financial records, coordinating with international partners on the accounts still overseas, and preparing 39 separate prosecutions, truly began. Officials say the full financial picture may not be finalized for another year or more. What's already clear, investigators say, is the cost. Not just the $1.4 billion moved through the network, but the harder number to calculate, the trust of 18,000 people who gave what they could, believing every dollar was doing exactly what they were told. If you want to understand how federal agencies actually build cases like this one, real investigations, documented outcomes, no noise, that's exactly what this channel covers every week. Subscribe, and I'll see you in the next one.